We're here at Frankfurt Open, and let's see how it played out. So we're moving now into London Open. Cool. So straight away, look, London Open, 8 o'clock on the dot. So 8:05 a.m. I'm in the UK, all right? I'm in London. So 8:05, aggressive move up, taking out the liquidity here into this entry zone or point of interest. That's what I was looking at. So I have my limit set, so I'm in at this point. I'm in. And now it's just about sitting and waiting. Is it going to take me out? Is it an L or is it going to be good? Let's see. What's going on, family? It's your boy Roms, back with another trade breakdown. So I know for those of you that tune into the channel often that it's been a little while, and I apologize for that, but I'm back. And today I've got a 10-hour trade on GBPUSD. See, for some of you guys, maybe you are in a position where you have plenty of time on your hands. Maybe you're able to spend hours and hours on the charts because you live at home with your parents, you don't have a job, or maybe you're studying it could be college or university or anything like that, but you've got more time on your hands than someone like myself. Maybe you're like me and you're a bit older, you have a family, you have a full-time job, so you've got other commitments, so you can't spend all day every day or a large chunk of your day in front of the charts. So you want to be able to set and forget, do your analysis in the morning, maybe set a couple of alerts here and there, know exactly what you're looking for on a time frame that is slightly higher, but that isn't quite swing trading. So I guess we'd call that intraday trading, trading between days, having trades be held for a day, maybe within a couple of sessions, but no longer than a couple of days. And today, the trade that I'm breaking down is a 10-hour trade that I took, and I shared it on my Instagram. If you follow me, if you don't, make sure you go follow me over there. And I'm going to show you how this trade was actually one that I took more so based on the 1 hour time frame. I know there's a lot of my other videos I've showed entries based on the 1 minute and the 5 minute, etc., maybe even the 15, but this one I didn't actually need much lower time frame confirmations to take the trade. And I'm going to break it down for you guys so you can have an understanding of what I was looking at, what I was looking for, and how I was able to still get a pretty high risk to reward within the same day. You can see, how it all played out. So we've got GBPUSD here, and the trade is going to be around here, right? But I'm going to go back to the 4 hour just to give us a bit more context as to what was going on. So what we can see here is, I'm going to mark out some of the liquidity here so you can see what I was seeing at the time. So you can see here all this liquidity that was taken by this high. So this was call it an inducement high or a swing high that took out liquidity and then broke lower, right? So even if you go back onto the daily in a second, I'll show you something else as well. But you can see down here, took the liquidity to the left, made the new high, came back down. And you could say this is a break of structure, but more importantly, liquidity is more important than structure. So more importantly, you can see here, you got this liquidity here that you can mark out like a trend line liquidity. When price came and took this out as a potential break of structure, and then price traded down. But what's key to see here is this on the daily time frame. On a daily time frame, what you've got here is this nice fair value gap, right? And these, this fair value gap, the fact that the price was bullish on the daily, because I'm looking at this as a major inducement low to the left on the left here, and we're going higher. What's key to understand is that this fair value gap in the discount part of the trading range is important, because you'll see this over and over again in your trading, is that when there's an imbalance like this, okay, it's a lot more complex than this, but the basics are, there's an imbalance like this and you've got liquidity, above it, you can see, you've got the order flow and prices come back down, price often takes out the final low before the imbalance or the fair value gap and then shoots higher. As you can see, it's done exactly that here. It's come down, tapped into the fair value gap, taken out this low, and then it's given us a nice break of structure here. And then from here on, price just continues to go higher. So the question is, do we expect this high here to hold? As you can see here, price mitigated that wick, but do we expect price to hold? And I think maybe you can ask this question yourself, but for me, no, it's not going to hold because we're bullish on the daily time frame. So this is just a mitigation of the inducement high, or you could call it a smart money trap even, potentially, but on a higher time frame, so on a daily time frame, it's a smart money trap for price to give us a reaction, come back down, and potentially go higher. Right? That's how I would look at it. But it's still a valid place to trade from because it's a daily time frame. You can take a massive trade from here. However, do you expect it to hold and then keep going lower to take out, this low, and this low? Doubt it. So you have to really be aware and understand, where price is at and what price is doing on a higher time frame to give you, a better idea as to what you should expect. And then if you look about on the 4 hour here, or even on the daily here, I can keep it simple. You can see as prices come up to mitigate this high in this wick, it's taking out these liquidity highs, these relatively equal highs, and then giving us a nice break as well here. Okay, again, you've got all this liquidity that's been taken out as well. So price respected the high initially, giving us a reaction to then come down and take out this trendline liquidity that's on the 1 hour / 4 hour to be taken out. But the question is, where do we expect price to go or to reverse to? Again, if we're expecting price to be bullish, you can, price is going to, first of all, always come back down to the discount range first, try and fill inefficiencies as well as take liquidity. So if I'm looking at this, I'm seeing this low here on a daily, I'm thinking, okay, I'm expecting at least that low here to be taken, for price to come into this imbalance, and then maybe, create an accumulation type of price action to then go higher. That's what I'm looking at on the daily. And, how is price going to get down there? If I can catch something or catch a move to take price down here, that would be great, because I'm pretty sure the price is going to at least get to here before it wants to reverse, if it wants to reverse. Because remember, we can always still be wrong. So this is the daily to give us the higher time frame context. On the 4 hour, it looks even clearer here. What you can see here is, price is giving us that inducement high, taking out these relatively equal highs, come back down, taking out these relatively equal lows, before, stalling here at this low here. The question is though, guys, is this a reversal error? Do you expect price to reverse from here and go higher? No, because of what I've shown you on the higher time frame. Does it look like a reversal error to you on the daily time frame? Hell no. So we can just get rid of that straight away, and we know that we're expecting this low to be taken at least before price is going to give us a reversal. But also, what are we looking at here? What we're looking at is price giving us a reaction, and I would actually class this as like more of a smart money trap. It's giving us a reaction to bring people in, and this is a 4 hour time frame, so you can take trades from here if you know what you're doing, because you can trade it back up to the efficiency to fill the inefficiencies on this time frame, and then take it back down after that, right? But if you look at this, what I was seeing at the time was straight up, like this is building up a little channel like this to then go higher and then back down again. That was my point of view. So you can see the channels here, you see the price here has gone aggressively, taking out the high and also giving us efficiency here. This is the efficiency. If you go on the daily time frame, let me show you. Let me make this a bit thinner actually. So yeah, on the daily time frame, you can see, look, right, this wick fills the inefficiencies or the imbalance and mitigates this wick, right? Gives us that efficiency. That's what I was seeing. So once price has done that now, and it's given us, the aggressive move up, taking out this high of the channel, I'm expecting now, price to at least come down to this low. Remember, this is a smart money trap. So it's giving us a reaction, and then price is also building liquidity on the way up. So down to the 1 hour, and now things get a little bit more interesting, because I'm now expecting this high to hold. I'm seeing these order flow mitigations come in. I'm seeing liquidity being built. I've got my target here at least. And things are starting to get clearer on this time frame. And this is how I was seeing things. If we go down to the 15-minute, again, maybe someone can look at this and think, no, this is just building liquidity. Maybe this is an order block. No, this is an order block maybe. What do you think? Order block to then price to mitigate the order block here and then go higher, taking out this as liquidity? Maybe? No, that's not what it was doing. Price was actually just, took out the high over here, giving us efficiency on the 4 hour and on the daily time frame. And this is just order flow. Just consistent mitigations, just order flow. That's all that is. Again, order flow, right? Not all the imbalances are going to be filled. Because remember, we've got to always do multi-time frame analysis, but I'm not going through everything. But once the move up here happened, taking out the high and giving us efficiency on the high time frame, I then expected the liquidity below to be taken. This here is not an entry. This here, I saw it as a smart money trap. That's what I was looking at. Okay, so then the question is, if you want to get a sell, surely you're going to want to wait for, Asia high to be taken, which is this purple box. Surely you want Asia high to be taken first up here before, you want price to come down, maybe give us a reaction from the smart money trap, take out here, Asia high, give us something, mitigate, and then go. Again, no, it doesn't always happen. If you understand the hard time frame narrative, which I've shown you already, you can understand that you can't expect Asia high to be taken here because Asia high has already given us the order flow mitigation, but also the hard time frame narrative is bearish. The hard time frame has already done its bullish sweep of liquidity, so it doesn't need to sweep any more liquidity on the hard time frame. On the lower time frame, it might, and I'm about to show you that now. So what I'm going to do is we're starting here from what we are Frankfurt Open. Okay, so I'm going to forward on a little bit, mitigate, drops again. Cool. So this is how I'm looking at this. I'm looking at this as a smart money trap. Straight away, you can see here price is, it's gone quite deep into this potential order block, as someone might say. But for me, again, smart money trap, because I believe that price was going to be bearish. So I'm looking at this now and I'm like, okay, I'm not liking all this. I'm looking at this as liquidity to take. But the question is, where's the entry? There's nothing clean here on the 5 minute, which is the entry, which is the time frame I like to enter on, ideally the 5 minute or the 1 minute if it gives. But my win rate is so much better on the 5 minute. I found that when I trade too often on the 1 minute, I take a lot of unnecessary losses. So yeah, the 5 minute is my optimal entry time frame. So I'm looking at this as liquidity to take, but I'm like, okay, where's the entry? Whereas in it's not clean here. Is it this here? Is that my entry? Or, well, it's not SMT, apologies. Is that my entry or is it up here? Maybe to fill this imbalance? I don't know. Do I set 2 entries like this? Do I do this? Or do I, and one there and one there, one of them must work out, surely. Nope, that's not what I was doing. That's not what I was looking for. I decided to go on to the higher time frame to get more clarity. If something isn't clear, don't take the trade. I was never going to take a trade based off just liquidity being taken here and then setting a stop loss like up here above this high, a 10 pip stop loss. Nope, not interested. So I went to the 15 minute, had a look, bit better, still not really clear to me. Then I went to the 1 hour, and then the 1 hour is what gave me clarity. So the 1 hour, you can see here that this candle here, you've got the imbalance below it. You've got the black line is the liquidity that I've marked out. So I just marked out the liquidity, and I worked out that I wanted to go off of the 1 hour imbalance fill. That's literally all it was. So I set my limit on the liquidity high. I then put stop loss above the 1 hour high, like this, or I might even put an entry here. Can't remember exactly where it was, guys. Apologies, forgive me for that one. And then I knew that I was targeting at least this low of the channel low, or this low, which was the daily low that I was after. Let me go back to the daily. Yeah, the daily low, which is what I was after. That's what I was targeting. Okay. And let's see how it played out. So we're here at Frankfurt Open, and let's see how it played out. So we're moving now into London Open. Cool. So straight away, look, London Open, 8 o'clock on the dot. So 8:05 a.m. I'm in the UK, all right? I'm in London. So 8:05, aggressive move up, taking out the liquidity here into this entry zone or point of interest. That's what I was looking at. So I have my limit set, so I'm in at this point. I'm in. And now it's just about sitting and waiting. Is it going to take me out? Is it an L or is it going to be good? Let's see. Again, I wasn't expecting Asia high to be taken because of what is occurring on the high time frame. The high time frame had given us the move up, sweeping the liquidity to the left and giving us the high time frame efficiency, which is this dashed line. So we're efficient on the high time frame. So there's no need for price to go higher on the high time frame to take liquidity, more liquidity on the high time frame. However, there's one thing that I always say. Price does like to, or price does need to take liquidity on the buy side for it to go lower, or on the sell side for it to go higher, right? So if I'm looking to sell, I'm seeing the reaction from the smart money trap, and I'm seeing this high and this pool of liquidity. So this is, for me, I saw this as enough for price to take out this liquidity high, this liquidity zone, mitigate the 1 hour imbalance fill and the 1 hour candle that I showed on the 1 hour, and then price to reverse from here because it's taking liquidity on the buy side to then go lower, right? So that's what I was looking at. So at this point, I'm in the trade. Let's see how it plays out now. So press and play. Good reaction so far. You got maybe what's that? About half hour of just price playing around, but it's a 6 pip stop loss, a bit larger than usual, but it's fine. 6 pips. If I'm gonna go in for a 10R still, so that's still solid in my eyes. Hang around for a little while, give us a good reaction here. So at this point now, I'm actually break even. So if I go now on the, let me go to the 1 hour time frame because that's what it's based off. So you can see here, the black line is where the liquidity was in the lower time frame. See, price has gone straight into that candle that I marked out, mitigated it. Smart money trap now taken out. So as you can see, smart money trap or potential order block that smart money traders may be using was used to give us a reaction to bring in more traders on the buy side to mitigate where it needed to mitigate and fill the efficiency. So fill the inefficiency to make the market efficient to then just take it out. And that's exactly what happened. And then at this point, it's just about holding. And this straight away, aggressive move down. At this point, I always take, not always, but more often than not, I take 50% of my partials at 5R if it's logical. The reason why for me, this area is logical, because you had this low here, taken, and price could react from this zone here. Could. On the 15-minute, price could react from here and go higher if it wanted to. I'm not always right. Although I had a bearish bias, I'm not willing to leave a trade that's gone 5R and leave without any profit. I don't think that makes any sense to me. So I took 50% of my partials here. The rest of it I left to hold. And let's see how the rest of it played out. See, didn't hold for that long. Maybe gave a reaction at 1 o'clock. And then 3 hours, to be fair. That's 3 hours you're thinking about the trade potentially reversing on you. But at that point, I've taken 50% off. So psychology-wise, I'm in a better place knowing that I've secured 50% of my position. So that helps. You know what I mean? You can kind of get on the rest of your day knowing you've made some profit. And then price took it out. So you can even class this now also as a smart money trap. And that's what I saw it as. But again, I said, price could keep going higher to then come lower because I'm not always right. So I always prefer to take partials. And then price kept going throughout the day. And then finally the following day, it took out the low at New London Open, right, for 11R. So it kept going a bit lower, but at this point, I was good, but look at this now. So this is why also it's important to take partials at, logical price points, because what the price done was came down, took out the low, came back up again, filled the inefficiency, but this time on the 15-minute, which again is logical. So this is this is 2 days later actually, and then gave us another entry. I actually had another entry marked out here that price didn't mitigate. Let's have a look at this one quickly. Yeah, so you can see here on the 15, price took out these relatively equal highs, gave us the break, create liquidity, and I saw all of this as equal highs. I believed that all that was going to get taken. Yeah, equal highs. I thought this was going to get mitigated here, and I thought that price was going to come up, mitigate this, to then give us a new low for another 14-hour trade. And it would have if it gave me the entry, but it didn't. It decided to just mitigate this instead. And then this was during Asia, so I wouldn't have caught that anyway, and then go lower. So you win some, you lose some. This one I missed, but this one I caught. And you know, it's a solid trade. But again, this is how you can catch trades. All right, you can set and forget to it in a way. Set your limit, your sell limit, set your stop loss, and then you just set your alerts for when price gets triggered. You set another alert for when you want to go break even, and then you just set your take profit levels, and you can manage the trade that way. Hopefully that was useful. I know it's very basic, but you know, this is YouTube. I don't want to make things too complicated, but you know, who knows, I might do something where I make a little private community to go deeper into those that want to go deeper, but I'll think about it. We'll see. We'll see what happens. But you know, if you want more trade breakdown, guys, don't forget to, you know, click that video in the corner, give that a watch, but please do hit subscribe, and you know, happy trading, safe trading, God bless, take care, and we'll speak soon.